And welcome to another Leumi Financial Corner. With us once again, Michael Zaremski, head of the U.S. Private Banking, Bank Leumi USA, member investment committee for Leumi Investment Services. Michael, good to have you back.
Good to be back, Zev. How are you doing today?
Good, thank God. Spring's in the air. I think there's room for optimism. Things are moving in a positive direction. But what's going on in the market seems to be not reacting to all the good news.
Zev, it's a good question. And before I give an answer to that, let me just reiterate that the views expressed are mine, not necessarily those of the bank or the broker-dealer. But in short, I believe that we're in a situation now where things have been relatively negative for so long. It's almost a year. In 2 weeks, it'll be about a year or so since we started really having these pandemic lockdowns. And I think so many people have just become accustomed and attuned to some of that pall of negativity that I think the market and people in general are having a very difficult time kind of digesting some of the good news that's out there and what that means going forward. We've talked in the past couple of weeks about the emerging recovery that we're seeing from last year's recession. And I think what we're also seeing at this point now, even more so, is a shift not only to recovery, but beyond recovery into reopening. And I think that the market now is struggling with the fact that a lot of the drivers of what worked in markets last year is kind of falling away a little bit. We mentioned it in our last conversation, but I think that the metaphor of the Peloton is very apropos, not just because of the company name. But again, if you think about bicycle racing and you think about the Peloton moving forward as the race extends, what you do see is change of leadership frequently from the front of the Peloton to the back of the Peloton. And I believe that's what we're seeing now as economic conditions are changing quite rapidly. So again, and you're getting people that are very concerned about, things like, the interest rates are rising. We talked about that in a couple of our previous calls where we finally broken out of that range. It's not too long ago that we were below 1% on a 10-year, and now we're in the 140 range. And, more and more you're seeing prognostications that we could be up near 2% by the end of the year. Just to put that in perspective, while we've moved so far so fast, if you think back to just over a year ago in last January, before the pandemic hit, the 10-year rate was at about 190. So we're still a full 50 basis points below where we were. So when people get really concerned about where the 10-year is, I think we really need to put some perspective about that in terms of where we are historically, which is extremely low rates, and where we were even for about a year ago or so, where it was at 190. So there's a lot of change happening right now. Markets generally don't like change, and I think people are just really having a very difficult time reflecting on it and trying to make some of those decisions as we're going through some of this churning around within the marketplace.
But what you're saying, there is room for optimism. Things are picking up, and we're seeing, hopefully an end to Corona with the vaccinations that are taking place. So when do you think the market will reflect that optimism and the new pace that's going to be taking place?
Well, to reflect on the optimism of it, seeing some of the new reports on the J&J vaccine, and again, private sector working so well together, where J&J and bitter rival Merck are partnering up, where Merck is actually going to help produce vaccine. Absolutely unbelievable news where people are now suggesting that we could have full vaccines and herd immunity by as early as May, which would bode extremely well for the summer. So I think that there still remains tremendous amount of room for optimism and more market success for the equity markets as we start rolling towards the summer. Here in the Northeast, people will start being outdoors a whole lot more. As you said in your opening, spring looks like it's upon us as we look outside. And the reopening trade and moving into this element of maybe people actually going on vacation, people going to restaurants, I think also bodes very well for the employment pictures. There was an announcement just yesterday from the Texas governor, and they're rapidly moving to 100% of an open economy. And what I continue to be amazed at is, again, there's a pall of negativity about where we are with, let's say, unemployment rates in the mid-sixes. And I look at it in the reverse and just keep saying how amazing it is that with all the shutdowns, with all the lockdowns, how amazing is it that unemployment is only 6.5%? And what happens and how rapidly will things change as we get more and more reopening? Even looking at some of the professional sports teams in the New York areas, Capacity right now for the Knicks and the Rangers is about 10%. They're looking to start ramping that up gradually up to maybe 20 or 25%. And, baseball coming around the corner soon will probably have even more people in the stands as we hit summer. So all of these activities, I think, are really positive in promoting economic growth, economic development, and GDP. So I think that there's still tremendous room for equity markets to continue to move. Again, I think we have to be selective about who it will be, which companies it will be, which sectors it will be. And again, I think at the beginning of the year, if people were asking, what do you think might be the leading sector on a year-to-date basis, most people would not have really predicted things like energy or financials or, kind of other elements of that, call it value or reflationary trade to be the leaders. But that is, in fact, what we're seeing. So I think we always have to look at the data. We always have to look at the modeling and recognize that there is a big rotation taking place. That rotation is really moving from last year's pandemic and work at home environment into economic recovery and now into economic reopening. And I continue to remain optimistic that, better times are ahead as we continue to get the vaccines out, put the pandemic behind us, and move to a more normal situation of reopening.
Looking forward to that, and you've been right before and continued with that realm of thought. Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of Investment Committee for Leumi Investment Services. Thank you for being here with us.
Thank you very much, Zev, and look forward to speaking again.